So, blaming capitalism is absurd on its face. We lived in what's called a mixed economy. A mixture of socialism, a lot of socialism, a lot of government intervention, a lot of government regulation, and some economic freedom, some market activity. And in that mixture, all we hear when there is a problem is it's the fault of the market. We never hear about the failure or the abuses created or the disincentives created by regulation. We never hear about the mistakes government makes. The mistakes government has to make as an economic player. So, just to run through a few things as they relate to the current housing crisis, or the current recession. What is it that led lenders to lend money at, to lend these mortgages out in 2003, 2004, 2005? What is it that caused borrowers to borrow money during these years for homes that they clearly couldn't afford? Well, there are a number of things. I mean, some of them couldn't afford it. A number of things. One, interest rates were unbelievably low. Unbelievably low. They were indeed negative in terms of relative to inflation. So interest rates usually take into account inflation, the value of the deterioration in the value of the dollar, plus some rate of return for the lender. Well, the Federal Reserve was keeping interest rates so low that it created a massive incentive to borrow money and a massive incentive to lend money. Indeed, rates were so low that it was almost like you were being paid to borrow money. At least the banks were, because they were the ones who could borrow at these incredibly low rates. So they were borrowing money on the one hand at these very low rates, and then they were lending them out at still low rates, but they were making a little bit of money on top of that. But the Federal Reserve, by keeping rates so low, 1%, for over a year, 1%, when inflation was running at somewhere, CPI, that measure of price inflation was running somewhere between 2, 3, 3.5%. So it was negative. You were getting less than what inflation was. So there was a huge incentive to borrow and lend money. One of the consequences of that is people were borrowing a lot of money to buy houses. Their interest payments were very, very low, so they were willing to bid higher and higher and higher for homes. And it created this notion that home prices could go up and up and up forever. But to a large extent, that was a consequence of these incredibly low interest rates. And indeed, if interest rates had stayed at 1% forever, then home prices at these high rates could be justified. But interest rates didn't stay at 1% forever. They went up fairly fast, from 1% to 5.25%. And what happens to your variable rate mortgage if you start out at 1% and you end up at 5.25%? And the mortgage rates fluctuate. It goes way up, and suddenly you can't afford the house you thought you could afford at 1%. Now, granted, people shouldn't have thought they could afford the house when they were borrowing money initially. Lenders should have realized the Federal Reserve was ultimately going to raise interest rates, and all these delinquencies were going to happen, all these foreclosures were going to happen. People should have expected all this. But the Federal Reserve's behavior created a certain momentum around this notion of cheap money, around this notion of house prices only going up. And economists and other pundits only fueled this attitude. So that's not the free market. The free market didn't set rates at 1%. Indeed, the free market would never set rates at 1% when price inflation is 2–3%. But what else about housing is unfree, if you will? Hasn't our government, since the Great Depression, had as a major agenda item home ownership? Every president has made as his goal, one of his goals, to increase home ownership among Americans. It's established as, in a sense, an American dream that politicians need to help us achieve. S&Ls, you remember S&Ls? They all went bust in the 1980s, 90s. S&Ls were created, saving and loans institutions were created during the Great Depression in order to allow for home ownership for Americans. Well, that experiment ended with the whole industry going bust. Tax deductibility of interest rates on mortgages. So a government incentive to get you to buy a home rather than rent a home. George Bush in 2003 or 4 launched the Ownership Society, in which we were all encouraged to go out and own stuff and buy stuff, particularly homes. We set up the Federal Home Loan Bank in order to make sure that there would be affordable loans to low-income home buyers. And because there's a problem that low-income people can't afford homes, right? They don't have enough money to buy a home. For years and years and years, banks wouldn't lend their money. They wouldn't lend to low-income people because they were bad credit. So what did the government do? The government instituted a bill called the Community Reinvestment Act, right? A law that tells banks you have to invest a certain percentage of all your loans have to be given in low-income neighborhoods. So go out there and find what we call today, negatively subprime loans. Go out there and find subprime loans. You have to issue them. If you don't, we are going to come after you. And indeed, Community Reinvestment Act is one of the reasons so many of these banks got into subprime lending, because it fulfilled their regulatory requirement. And even then, that wasn't enough. So the government created Fannie Mae and Freddie Mac, these government entities, that again encouraged home ownership by borrowing money that was guaranteed by the government. So the government guarantees the loans that these institutions take, and then they take that money and they buy mortgages from banks. And they guarantee that they will buy these mortgages from banks, and they're the ones that securitize them and sell them. And they specialize in what kind of loans? In loans for low-income households.